is the Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Miche, who is a leader at the University of Houston, working at the intersection of innovation, entrepreneurship, and ecosystem development. She's one of the people making sure that good ideas on campus don't just stay on paper. In her role, she worked closely with students, researchers, founders, and external partners to turn research, technology, and early concepts into real projects and startups that can move the needle on the regional economy. That includes supporting pre-acceleration and acceleration programs, entrepreneurial education, networking events, open innovation challenges, and initiatives aimed at building tech-based and impact-driven companies. Miche, thank you for joining us.
Good morning, Hall. Good morning, everyone. Thanks for the opportunity to be here and share my experience with everybody. And I'm new to 10 Capital, but I'm impressed with what you've been doing and what you have done. So again, it's an honor to be here.
Great. Thanks for joining us. And so where are you calling from today?
Actually, I am working technology commercialization at University of Houston, where I focus on translating academic research into angel and venture-ready startups. So my work centers on early risk reduction, helping technologies, the founding team to move from scientific promises to investable opportunities. So basically, the technology transfer work is adding the section, as Hall mentioned, of academic research, startup formation, and early stage capital. What we are doing is trying to clarify the market fit, identify the problem that's to be solved, and validate some key assumptions where proof of concept development and therefore from companies for investment. So the work including invention assessment, proof of concept development, startup formation, investor engagement, as you mentioned in the intro. And basically all that we're doing is to prepare the team, the technology, reduce uncertainty so that risks are still there, but they're clearer, they're understandable and manageable, and opportunities are more credible when we present them to the investors.
Well, that's great. So let's dive into the technology commercialization process you have there. How does University of Houston approach tech commercialization from lab to market? What exactly are we doing there?
Yeah, of course. So from lab to market, it's a process. So what we see it as a translational process rather than a single accelerated transaction. So we're not actually making deals. We are cultivating deals. And when there is an incoming disclosure, or even before incoming disclosure, we have like conversation with our faculty inventors, graduate students, postdocs, and we identify first 3 points, or we ask 3 questions. First is, what is the problem that you solve? And second is, who will experience most pain that they are willing to pay? And then the third question is, what proof do you have? What meaningful proof that you can provide to help reduce risks? So by asking those 3 questions, we help navigate the commercialization pathway for originated innovations. Not every technology is fit for startups. Some are more inclined for licensing. Some are so mature that they can be licensed like ready. Some are less mature, need some additional de-risk and both in technology or the market pool, and identify the market segment that exactly fits the technology. So we need to do some exploration, and others are not fit for, like, by the nature of technology, may not fit for direct licensing, and maybe startup formation is a better solution. So selectivity is the key. We ask the right questions, we select the right commercialization pathway for our technologies, and in which way we prepare UH technologies, and we protect our founders, we protect the institution, as well as early investors who take in the biggest risk.
Hmm. No, it's a very thorough process. So, what key success factors are you looking for in these technologies to translate them from the academic research world into viable startup companies?
Yeah, great question. So, success story, I think the most important key value is the science. You have to have innovative, great science to start with, but that's not what the technology transfer do. And what we do to prepare the technology in our inventors is to form alignment. So I would say that's the biggest success factor for technology transfer. And we align the technology with the market as well as the team. So how we're doing that, first, we help the team to narrowly define their technology. Often seen, inventors can be overly optimistic and they claim very broad application for the technology, which is true. Like, for example, I have a biology background, so examples I use will be in the therapeutic area. So, for example, if you have an inhibitor to a kinase, and it can have all different applications, and it can help indications or be used as therapeutics in indications like cardiovascular disease from cancer. So you pick your winner. But however, you can present the broad spectrum of possible applications to the investors because that's not great opportunity. Instead, it's ambiguities, which basically screams risk. So what we do is we narrowly define the technology and we suggest some initial use case that can be demonstrated. Second, we will help the team navigate the commercialization pathway, set realistic development goals and funding timeline. And again, often seen mistakes are the founders team being overly optimistic and ambitious at the same time. So being realistic and adds your credibility and reassures your potential investors. Thus, and not last but not least, we help founders understand their role in the company. There has to be a scientific leader, and inventors usually serve the role as scientific leader, but scientific leader doesn't have to do everything. So everybody in the team plays their specific role, and we have a clear structure to start with. So to conclude, academic excellence does not automatically translate into commercial success. What matters is whether the team can move from discovery to execution, and tech transfer is here to help you navigate that pathway.
So, you work with a lot of faculty inventors. What are the common challenges they have in commercializing their technology, and what do you do to help them overcome it?
Good question. I have some personal experience to share. I came from academia, so I worked at Texas A&M biology department for 12 years before jumping to the more of the business side. So actually, any PhD graduate wanting to go into academia, wanting to be a professor, really values academic freedom. We like the flow of free ideas and we like explorative work. So we want to explore the research broadly as we can. We want to ask and work on open-end questioning. And that's the nature of our faculty inventors. And that's why they're so innovative, creative, right? We value that. But however, the business world requires discipline. You cannot pose open end questions to the investors and expect them to pull the trigger and say, hey, I want to put cash in this. That's something the government foundation and the university is helping to innovate broadly and openly and promote creativity. So in terms of licensing and startup formation, their goal instead need to be narrowly focused. So focus is the key instead of explorative. And the mismatch often causes like too many potential markets. For example, I said from cardiovascular disease to cancer, like too broad, unclear product definitions. I don't know what my product really can do. It can be a robot, maybe it can apply surgery, or maybe it can be used in drug discovery, but you got to pick one to pursue. You cannot attack them all at least at the early stage. And again, overly optimistic about timelines. So we work with SAC inventors a lot. What's the regulatory hurdle to go to overcome, what a manufacturing hurdle to overcome, and how realistic should we plan the timeline. Another common challenge, actually, I touch a little bit on the second question, is role confusion. So we have champions that lead the science discovery, but that scientific leader, which is usually our faculty members from UA, does not necessarily need to make all the decisions for the technology in terms of commercialization. So what UH does here is to translate research goals, which can be as broad as possible, into commercial milestones, which is narrowly defined, very focused, and with with realistic timeline.
Ah, that's
Yeah.
that's quite a program you have there. So, what's the role of proof of concept funding in accelerating technology readiness? When does that come in, and what is the goal there?
Yeah, that's actually great question. It fits the current trend. So as we see, we have and we are trying to expand our proof of concept funding program. And we see state initiatives like state agencies funding proof of concept in programs that trying to bridge the gap between academic research and commercially investable projects and other sister universities with the like widespread of initiatives everywhere to help factory inventors to bring the technology to the market. So basically, we call some university call it gap fund, some university call it bridging fund, etc. But with one common shared goal is to also specific questions. So we want to make the technology not only just interesting and innovative, not only a wow, but investable. So we have great science, and what tech transfer adds value is to add discipline to the great science. So we help then build prototypes that validate the application, and we fund, so proof of concept fund as in we, but there are all kinds of proof of concept fund pilot validation, like in the field of healthcare or biological science. And we have ex vivo and data. You have ex vivo data in the lab. How about we fund animal studies? So you have in vivo data that's more relevant to human health. And then manufacturability. So you synthesize your chemicals in the lab in milligram scale. But if you are going to use it in clinics, you will need grams, kilograms, and then how we will help fund pilot studies to scale up to solve the technical issues in the scaling up. And also customer discovery, something like I-core activity. Find out where's the pain, who encounters the problem, who will be your future customers, how will the potential customers like your solution to the problem. This is really a solution, a necessary solution, or is it something nice but is dispensable? We don't have to add it. So we will help refine the customer discovery process. So a small amount of well-targeted proof of concept funding can truly dramatically change the company's risk profile. So hopefully they will overcome the value of death and get the project more attractive to the next round of investors.
Yeah, that's quite helpful. So you work with a lot of intellectual property coming out of the university. How do you align it with, the real world market needs? How do we get it into a place where it's going to be usable by the market?
Yeah, this is a great question. Actually, some initiatives that we are actually actively implementing right now. So as universities, officers, you run on a budget, and with increasing number of disclosures, actually your patent prosecution, patent protection expense grow greatly. And sometimes to keep it sustainable, you need to control patent budget. So we watch our patent budget, we can invest in everything that comes along. It needs to be strategized. And so therefore, our philosophy of IP protection is we do not just protect novel ideas. We do not protect just the novelty of the invention. We protect relevant novelties. So strong IP protects value, but only relevant IP enables deals. So we protect IP with the strategy in mind that we are protecting something that's licensable or that will be used to form a company. Therefore, the patenting strategy have early market discovery in mind. So patent is a right to exclude competitors. So when we design our claims, when we protect our IP, we have in mind how the technology is going to be used, what kind of the competition can be possible, and we want to limit. With that in mind, our IP will be more relevant to future business partners, and therefore you will reduce friction later on doing due diligence, licensing, acquisition, etc. So speed up and smooth the process later on.
Well, great. And so, how do you engage industry partners and investors in the commercialization process? Very early on, it can be hard to see the value yet, but how do you get them involved?
Yeah, good. This is very, very relevant. So in order to commercialize, we need industry partners, we need investors. So that's the most exciting part of technology transfer. But investors actually are in this business to not to spend money, honestly, to look for returns. So what we do is, well, any investors, if you're investing, you want your money to do the work by itself. You invest in stocks, you invest in like funds, you can invest in startup companies as well. So when you are choosing what to invest, actually you're balancing the risk and return. If your risk threshold is low, like I'll invest in CD or I will invest in government fund. If your risk tolerance is a little bit higher, I invest in the index fund, which the past few years is like 15 to 20%, which is really good. But venture investors, they go beyond that because they're willing to take bigger risk and get bigger returns. However, no investors invest without homework. So the investor has to know you, know your technology in order to make the decisions. We do not expect them to make decisions early on, but we try to cultivate the connection early on. So we don't sell at the first meeting or the first few meetings. We rather ask questions and we try to understand what's their question, what they want, what they're looking for. So basically, during the early engagement, we're not asking for investment. We are asking for early feedback. So let's try to pressure test our assumptions. Is the hypothesis relevant? Or maybe the hypothesis is relevant to another group of investors. We refine the use cases. We present the use cases that we have, and we ask feedback. So how would this be more attractive? for your investment decisions. And we identify non-obvious risks that from the investor's point of view. So that way we prepare our technology and our team when capital is finally raised, the major questions are already being discussed and surfaced.
That sounds great. So, what are some best practices for forming startup teams around university developed technologies? What are you looking to do there?
So we have our own like accelerator Innovate. And what we do at Innovate is we recruit inventors with deep technical expertise. They are like the lead inventor on the technology. And also we pair them with operational or commercial leadership. Like we have a network of seasoned CEOs, entrepreneur leads that can be are interested in leading UH technologies. And then we help the team clarify their boundaries. So we help them define their roles and clarify the reporting structure and discipline. And then all the responsibilities must be explicit to align incentives. So that way you prevent confusions or frictions later on.
Cool. So, how do you shorten the timeline from invention disclosure to first customer? It seems like there's a lot of processes going on here, but what can you do to shrink that?
Yeah, it's a so tech transfer is a very complex process from invention disclosure, assessment to finally licensing with startup formation and contracting and compliance. So for the whole process, of course, diligence, like you punctuation, you define the time frame for each step and you stick to the plan. It's important. But for the project itself, we learn that it's very, very important to keep everything intentional. So we have pilot projects and we keep the pilot project pilot instead of scale it. And there are always additional experiments to do. There can always be further optimizations you can do, but time is limited. So we set time point, we set milestones that are attractive enough to the industry, but you don't have to optimize it to, like, for example, for your therapeutic and your drug lead can be, if it's effective concentration is in nanomolar, you don't have to go any further because that's within the range of therapeutic effectiveness. And then we engage partners early on, like we engage design partner relationships so that we can learn and validate the technology early on. And we engage industry partners and in sponsor research agreements so that they can help shape the technology and make it more adapted to the market. So these are the approaches that we validate the demand without prematurely spending too much time in open-ended research and therefore shortening the milestone and timeline to market.
Cool. So, what metrics matter most when you're evaluating the commercialization readiness of these technologies? What are you looking at to know where they are?
Okay, so InnoEdge actually focus on risk reduction metrics, and we do not count like activity metrics, but instead we measure the key technical risk and market pooling evidence like customer validation of the problem. And also we contemplate on the execution ready team. Do you have a scientific leader? Do you have a operational or commercial leader? Do you have a deeper appreciation of the IP and strategizing that? And also, we look at capital efficiency. So this risk reduction metrics actually mirror how angel and VC evaluate the technologies. And that's how we try to adopt them and implement them early in the life cycle of technology commercialization and prepare our teams and projects.
Well, that sounds great. Well, in the last few minutes that we have here today, what else should we cover that we haven't?
So I think to last point to make, or I guess recapture what I shared is the real value that university can offer to the investor isn't a deal flow. And university have invested in technology and innovations for decades, and millions of dollars have been invested from federal state funding and from university internal support. And what we do here to bring it ready for the market is preparedness. So when companies are formed with clarity, focus, and early proof, early capitals has much better chance of compounding. So that's what we can offer to early investors as your university tech transfer office.
Well, that's great. Appreciate you sharing that with us today. How best for listeners to get back in touch with you?
Yeah, my email is wwan@uh.edu. So that's my university email, and you can reach me. Send me email if you're interested in any of our licensing or startup opportunities, or just get to know our technologies and inventors. Happy to chat. We are here we're in University of Houston Tech Bridge and off on Highway 45 in Houston, near downtown Houston. And my phone number is 713-743-2654. So welcome to visit us at Tech Bridge. Welcome to email me, call me, whichever way you prefer.
Great. We'll put your contact details in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks, Hall. Thanks, everyone.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.